Coffee is for leaders.
You have all sorts of people who peaked early and then never were able to turn that into anything else and sort of all a downward slope. Or people who failed and failed and failed, and the insights they got from they failed and the grit they got from that is what enabled them to have a resounding success and be able to get up and do it again and again and again. And so I think you never know where things lead, and you have to be open-minded and you have to be resilient. But your biggest failure can turn into your biggest success. And I've had plenty on both sides. And it's none of it's been smooth. And I'd say I learned a lot more from the failures over time than the successes.
John, thank you so much for coming on the show. It's an honor to have you. You are the founder and managing partner of Torch Capital. Let's start there. How did you become the founder and managing partner of Torch Capital? I know that's a loaded question, but what was your journey up into where you are right now?
Well, it's probably one of the more circuitous routes. In the start of my career, I never even heard of venture capital, knew what it was, but always been an entrepreneur, always been really interested in following a path that I saw a vision or had a yearning or a calling. But that actually started in the music business. So I played drums, and that was the thing I was good at. I loved playing music. In college, I went to WashU in St. Louis. I joined the concert committee at the beginning of freshman year, which booked national acts for concerts, for universities, and realized there was a music industry that could be a career. And that was it. I was like, that's what I'm doing. That's going to be my career. So, spent college going as deep as I could in that industry, interning. I was luckily from New York, so I'm interning at labels in the summer. I worked with Dave Matthews Band really early on and helped book their first show ever in St. Louis. It's the late 90s.
Really? That's incredible. That's an incredible story.
Yeah. It's, that's an amazing story. And talk about opportunities given. Corn Capshaw, their manager, gave me a date, and as a very unproven young college kid, and we ended up vastly outselling what the expectations were. And that started a relationship with him and the band that gave me an inside seat to watch as they exploded. It became one of the biggest bands in America.
Yeah, that is incredible. So
that was all during college. So that was crazy.
I can't even believe it. So how do you think your diverse background of music, media, technology, how do you think that influenced your approach to leadership and also to your investments?
So, I went through a lot of twists and turns. The first calling was the music business. Then the music business got disrupted by tech. And I realized there was a lot more that where the world was going wasn't going to favor those who were left behind. And so I needed to get more educated. So I went to business school, which is something I never wanted to do and was not customary in entertainment, let alone music at the time. Went to Columbia, learned a ton, realized everything in media and entertainment would get disrupted. So I couldn't go back in, which was a very disheartening, but also created opportunity. So I wound up going to McKinsey because I thought that would be an interesting place to sit when your industry is being disrupted. And I ended up in their media tech practice for a few years. And then that took us to the 2010s when the New York tech ecosystem was really launching. And at the time, it was very unstructured. Anything was possible. A lot of really smart people just trying things. It was very inspiring and creative. So I wanted to go in that direction. And that was appealing. And then again, you just never know what happens. I was introduced to Jack Welch by actually some entertainment contacts who were working on a TV show with him. And they needed me to just run some case studies with him because I was at McKinsey. I hadn't been there. I never would have gotten that intro. And then he was launching an online education venture and brought me in to be his right hand. And that was my first startup experience, but also a tremendous business mentorship experience. And I spent 2 years with him and his wife, Susie, and they built this company and sold it to Strayer. And that's how I got into the startup world. And then it was really on the entrepreneur and operating side. And on the side of that, I was starting to do angel investments and love that. And as my last company was called Inside Hook, we sold to private equity. As I was thinking, what do I want to do next? Do I want to start another company? Do I want to invest? And I was like, you can kind of do both if you look at it the right way. And I started to see the parallels from my life as a manager to what actually being an early stage investor looks like. And I was like, wait a minute, there are a lot of unusual parallels. And you ask, what did that background present? It enabled me to connect dots, I think, in unique ways and use the ability to recognize talent in unique ways. And if you see things other people don't, and it's the right things that can create a lot of opportunity, especially as an investor.
So Jack Welch is a legend, just a legendary businessman who, I immediately think of 30 Rock and Jack Donaghy and like that whole.
And he was not like Jack Donaghy.
Yeah, but Donaghy like revered Jack Welch or something. I think Jack actually made an appearance on the show.
He did.
Yeah, which is like hilarious. But he's this legendary businessman who's beloved by everyone. What did you learn from him during those 2 years? What are some of the things you took away from that?
Wow, there's so much. I mean, I think the first thing that's really interesting, and at the time, he was probably the most famous CEO in the world, even though he'd stepped down from GE. His ability to connect with people was really unparalleled. It was funny. He hated politics. I mean, he loved supporting Republican politics, which I was a little a different side of that. But he didn't like politics. He didn't like the act of it. But he could connect with everybody. I remember being on the road with him, and he'd want to chat up the cab, the driver wasn't a cab driver, but his driver at the time, or the bellman, or anyone. It was just an unbelievable intellectual curiosity and a personal curiosity that was unsatiated, and everyone was treated equally that way. And that was really incredible because I think he got insights in how people think. If you read about his history at GE, he had insights that he disagreed with his senior execs, right? And he was right, because he really was always trying to figure out what the end customer wanted and put himself in those shoes. But it came from a very natural perspective of loving to talk to people and learning about their background and learning about what motivated them. And so that was incredible to watch that and see how he approached the world that way. As big as he was, as he said, he loves to be on the shop floor as much as he loved to be in the C-suite.
So tell us about your investing. And so you said you started with doing some angel investing, and that led to this realization that hey, there's a lot of overlap between what I was doing and what a VC does and all of this stuff. Give us a sense for what made you jump all the way in on that.
So I think, look, I knew nothing about investing when I started writing angel checks. I was just working for Jack, getting in the startup world in New York, which is in itself just getting reinvigorated. But I know, I recognize something, and it really comes back to talent and seeing a market opportunity, which is where the parallels, I think, to music come in. The first check I ever wrote was into ZocDoc, into their first round, and I met Cyrus, the founder, and his vision. I understood the pain point he was solving, that it's very hard to find a doctor, and how do you know if they take your insurance, and how do you know if it matches your calendar? And as people are moving jobs more and more, leaving university or traveling around, how can you create consistency nationally? A huge vision. And he was very passionate about it. And he had a really explicit way of how this could work and how technology could enable this capability for this platform that never existed before. And so we'd speak, and I'd find out how it was going. And finally, he's like, "You're so interested in this. You have such interesting insights. Why don't you actually write a check?" And that was really scary, to write a check. Luckily, I made a little bit of money in music. And so I was like, okay, I'll write a check. And that was my first one. And then I met Rob Refkin, who started Compass, was my second check, and I'd known him already. And he partnered with Ori Alone, and it was a really brilliant team of visionary founder, charismatic, with an incredible technical background co-founder. And they're like, look, there's opportunity how tech can reshape how people buy houses, how agents operate, empowering agents and customers, and huge market. And there's just something there that was extra that wasn't there with other folks who had spoken to. And so it was really being attracted and getting, the magnet of talent. And then an interesting pain point was that was all I knew. I wasn't thinking about models and the specifics, but I saw the North Star and both very mission driven founders. And so that sort of became the theme, and I did more and more, and I learned as I went. But it really started with direct relationships, understanding a market opportunity, and having the belief that this founder was going to find a way to solve that pain point.
Have you always invested early stage? I mean, that's incredible. And if so, and even if you don't, what are the qualities that you look for when an investor or when a startup or entrepreneur pitches you an idea or something like that? What are you looking for?
So to start, yes, I've always invested early, sort of, whether it was bands, you find them as a manager, you nurture them, you get them signed, you build their audience. Same thing with entrepreneurs. I like recognizing it early, and I love rolling up my sleeves and really helping shape and build and guide it best I can with founders. So yes, it's always been early. And I also honestly never really had the chops to be a growth investor. And it was much more data, balance sheet looking versus vision looking. And I like to assess visions. What I look for, first of all, a clear mission that I think that I personally believe in, that is a mission that needs to, we always say pain point, it's very similar. Acorns, which is one of the companies that I was an early investor in and stayed very close to, Jeff and then Noah's current CEO's mission was, how do you enable everyday Americans to grow their wealth? Even if they're not sophisticated in finance, even if they don't know how to play the market, they still should be benefiting from things that people in finance or more sophisticated investors have. And how do you do that without them feeling in their pocketbook? Because if they have to save for vacation or save for something in the future in a market that's very murky, they're going to save for the vacation. So how do you get people to create new behavior simply, painlessly, that will actually benefit them in the long run? And so that was very exciting to me. And I saw a huge opportunity for that. And they built a tremendous company that to this day is one of the most trusted brands in the financial services space. And they've done, they have 6 million active users on their platform who saved and grown their wealth through the Acorns platform. So mission is huge. Having a really clear vision, how technology can shape or accelerate or exponentially change the way, what an outcome can look like. And then brand. I think you have to be passionate about your end customer. That has to be in your DNA. It's not a business decision. It's just how you have to be. And that's a lot of what I'm assessing, because there are a lot of smart people who can put something on a whiteboard and try to make a successful project or product or company out of it because there's a space and there's money to be made. That's not interesting for me. What's interesting is people who really understand their end user, and every decision they make is going to be, how do they benefit that end user? And I think I have 7 or 8 unicorns at this point from very early stages. Every single one of those founders, whether it's the founder of Row or Sweetgreen, they all stuck to that all the way through their trajectory. Even they were massive companies. You speak to those founders, they're still obsessed. How are people liking what I'm doing? How are we innovating, creating a better experience? And I'd say once you figure out you believe in the pain point and mission, the next most important thing is that founder have that DNA?
Well, what's remarkable is your track record. To have that many unicorns is unbelievable. That's actually remarkable. So congratulations there. So you're obviously doing something right to be able to get on the early stage on that many unicorns. It's really quite impressive. What did you learn at McKinsey that you've taken to the investment world, and what was your time there like?
So it was fascinating. You can't have a more disparate experience from being in the music business, late night in the studio, on tour, at industry parties, very social, no data or analytics, very little finance, all the way to instead being late at night in a basement trying to put a PowerPoint presentation or spreadsheet together. So it was trial by fire. It was an incredible experience. I learned a ton. I really went in there to learn. I think there are a couple things. One, first of all, it's unlike what I heard banking and other very hard driving cultures are like. It was very non-hierarchical. You could be very junior there and have enormous responsibility, very well respected. You'd feel free to call on partners for advice or for guidance. And so I thought the culture, especially at that time that they'd created, was A+. They did an incredible job of curating the people there. It was very collaborative. You worked hard. There's no question, very high expectations, but it was very much everyone was in the trenches together. And that was, I learned a lot from that, and I tried to carry that through. The second thing is, you're there, you're smart, there's a way to figure it out. You're not, they gave part of that responsibility they gave is they said, there's no exact answer yet. It's up to you to have judgment, to understand how to go through data, collect information, and get an understanding, and then start to create hypotheses and start to test them. And that's a huge thing. I think founders have to do that, and I can empathize with them. If you don't have an answer and you don't even know where to start, you got to start somewhere and build your thesis from that and build your plan from that. And to give you that confidence and the skill set to try that, and if it's not working, how to pivot and be comfortable with that is a very rare environment. It was less about making mistakes and there are other people who would oversee what you're doing, so you're not going to hit a wall or jump off a cliff or something. But they wanted you to explore things because you also may connect dots and get insights that no one else had thought of. And they wanted to give you the creative room to do that. So I learned a ton from that. And then the hard skills were incredible. It was, like I said, trial by fire, but learning how to ingest data, think through data, have a thesis, but then back it up, that's still very much how we operate today at Torch at the venture fund.
You're also on the Council of Foreign Relations. It's incredible. What an interesting time to actually be on that council too, by the way, with all the tariffs and everything. What have you learned from that? And give us a sense, like, where are we at right now in foreign relations as compared to the United States and everybody else?
I think I don't think anyone knows exactly where we are with that. I think the way things are being done is different. Some of it may not work. Some of it may work, and some things had probably deserved to be shaken up. I think what I learned there, and it's just been a passion of mine, it doesn't directly correlate to my day job, but a lot of interesting macro insights. But what the council provides is really a place where people who would never normally talk to each other get to mix and mingle and discuss topics and learn. So it's people from the private sector, but people from the public sector, from the government, from the military, from national security institutions, from economists. And that's what's interesting, to get all these different perspectives and people who are top experts in their fields, but on your day-to-day role, you would never get to cross paths with them. And to hear their interpretations of things or their insights, that's what I love about it. And it's nonpartisan. It's not about politics there. It's really about policy and where things are going and different perspectives on that. And so I've gained a lot from that. But yeah, we're in new territory with this administration, and I don't think anyone has a clear understanding of where things end up. But very interesting times.
Yeah, it's wild. By the way, I'm just realizing, like, as you're talking, I'm like, I have a red hat on. This is University of Utah. I just want to be clear.
No
red
judgments.
Hat kind of stands for all sorts of things these days. What advice would you give to aspiring entrepreneurs about building and leading mission-driven companies? Because it does seem like you have a focus and really a talent at understanding and finding entrepreneurs and startups that are mission-driven. What advice would you have for those who, want to start a company like that?
The first thing is, make sure your mission is a big enough mission. There are a lot of people with great ideas if you want to create a big company. And if it's venture backable, we generally don't do things unless we think there could be a big outcome and create big impact. Make sure it's a big enough mission. Make sure you're thinking big enough, and make sure you're really thinking through multiple layers in the future of where technology is going, where customer behavior is going, where those things meet down the road, and what things it could unlock. And generally, you want to launch with one wedge or one very focused element of it, but you need to have where that fits into a bigger vision to create a major impactful company. The second thing is, you need to win that wedge. So you need to think big, have a big mission, but you need to start at a very focused point. And I think a lot of entrepreneurs try to do too much too soon, and you've got to win your first step to earn the right to win the second step. And that focus is what always wins. We're an early stage fund. We focus on early stage. We keep our fund sizes small. The team knows exactly what we stand for and what makes sense for us. And that's how we become best in class. And I think, founders, even, it's either early success and they think they can do it all very quickly. And it's not, you really got to own what you do. Or if it's not working, it's not the end of the world. You can pivot. And I think almost every unicorn I've been part of, the first thing they came out of the gate with wasn't the thing that ended up being their main success. It was adjacent to it. They got an insight because what they were doing wasn't working, but the solution to that insight is what the big result was. But the big mission was the same. Like Compass, at first they thought, well, maybe tech should disrupt real estate agents. Then they realized people really like their real estate agents. So then they're like, okay, maybe tech should enhance real estate agents. And boom, they're a multi-billion-dollar public company.
Yeah, that's incredible. I just have to go back to this real quick, given your remarkable success at investing, and it is remarkable. And you just mentioned you try to keep your fund size low. Has that been hard? Has it been hard to not, because a lot of VCs would be tempted to grab more money because obviously you're making that 2 and 20 management fee, all that type of stuff, right? And so the more you have under management, the more you're getting on the fees and things like that. Has it been hard for you to keep that fund small?
Well, no, it hasn't. So first of all, yes, you're correct. A lot of VC, as I keep saying, just because you could doesn't mean you should. And I watched over the last 5 years since I got in this industry that happened for a huge part of them. But it hasn't been that hard for us. And I think one of the advantages was the fact that I didn't come from venture. I came as an operator. And so my perspective on how you build a company, back to what I just said on focus, we did the same thing. And I said, look, there's not enough quality companies that you can get enough ownership in to turn a 500 million early stage fund and be true to that stage. And if you become multi-stage, then all of a sudden you're competing with the most famous, most broad-based, resourceful legacy brands out there. And so for us, it was clear, this is what we do. This is what we're going to be best at. And so our mission was clear, and that helped, I think, protect us, especially in 21, where funds got way above their skis and started to have mission creep. We really tried to stick to our knitting. And I think, our 21 fund right now is a top decile fund. It's our fund 2. I think a lot of that's because we slowed down when everyone else was speeding up and valuations got crazy and things that we didn't understand were happening. So we pulled back. And then once things kind of normalized again, we redeployed. And I think it's important to know what you're good at and to stick to that.
How do you think about balance in your life? Because that's a very balanced answer from a professional perspective. Is like, just because you can doesn't mean you should. That's great advice that more people should follow. But how do you balance life overall?
Well, as Jack used to say, there's no such thing as work-life balance. There's work-life choices. He would talk about that a lot. And just to think that you can balance, you do what's important for you, but there is going to be a price to pay. Meaning, like, someone who's not balancing and who's working 24/7 may not be as fulfilled in many other ways, but they'll probably have more potential success. But I just think there's a short run on that. I mean, look, as a founder, you run really hard. All founders do, whether you're a founder of a fund or a founder of a company. And for us, and I'm used to this from being a manager, things are always happening. It's just not what you plan. It's also what your companies plan. And what doesn't go according to plan impacts you. It's not just what Torch is doing. It's what our portfolio companies are doing. And so I'm very much like, as a manager, it's 360. You're there 24/7 if need be. And I subscribe to that. I think our success has been being there through good and bad with our founders, but there's a cost to that. And the cost is time. There's many late night calls. There's many weekends working. There's many fire drills, and you have to be up for that, I think, to be best in class at this job. But that said, now that we have a 9-person team and phenomenal investors who, I think, our culture and the way we do things in our processes has really been spread out with more people who really know what we're doing, there's a little bit more flexibility and control. And I'm getting, here and there, I'm able to get a little bit more balance back. But look, it's to win is really tough. It's a very competitive world. And I think being honest about that is what's important to you, and there are ways to balance, but you just have to think very carefully, where and when are you emphasizing what part of your life?
What does a typical day look like for you?
Wow. It's one of the things I like about venture and having a portfolio of companies is no day is the same. It is never boring. There's all sorts of things happening all at once. I'm not a morning person, so I admire incredibly CEOs, investors who are like, I get up at 5 and I work out and then I, go through all the news and then I start my calls. I'm not like that. I'm more of a late night person, maybe coming from my music, late night roots. I wake up. I know they say you're not supposed to do this, so I don't recommend this. But the second my eyes open, I'm trying to get out my most important emails or what's top of mind after waking up. I try not to schedule meetings too early so I can really push out the things that I need to push out. And then my meetings start, and I'm sort of a little bit of a slave to the calendar. But I really try to assess every day what's important and what's urgent and important, and that can eclipse the calendar. And I'm constantly just trying to prioritize, and my team helps me do that. But that's really critical because you can get sucked under and you can just get doing all the things you're supposed to be doing, but you maybe won't be able to do the things that will actually enable you to break out. And that's something I'm very cognizant of, and I've had to learn to get much better about that.
What do you read? And what reading recommendations would you have for us?
Wow. I read a lot of nonfiction, less about business. I think a lot of the business insights I get are from Twitter and podcasts, but reading has been a lot of historical, nonfiction around history and politics in other areas. But I'm realizing what I miss and what I really need, Ben, back to creating creative juices and inspiring you, is regular fiction. And so, the phone is the devil. It makes it so easy. If you're a little tired and you don't want to dig into a book, you can just get such quick fixes on, I don't even mean Instagram, but even Twitter. It's interesting. It's substantive, but you lose that ability to ingest long form. And I think that's how you lose yourself in a book. And I'm trying to get back to that, but I'm trying to get back to reading fiction, and there's some wonderful authors I like. And I think to give your brain new pathways to reconnect intellectually is important. And today we're so inundated with information. I don't think we do that enough. And that's something I'm trying to be more disciplined. To say that I'm doing a good job, I'm not, but I'm working on that.
No, I totally agree with you. I think fiction's super important. So give me a sense for what about your journey to becoming the leader you are today was surprising. Like, what has really surprised you as you've, climbed the ladder of success, let's say? What about that journey surprised you?
You never know where opportunities come from. And I think one of the best advice or perspectives I got on that was from Bob Pittman, who's been an incredible mentor and investor of mine through my last company with Torch. He was the co-founder of MTV. He ran AOL at its height. He had one of the first sort of early stage New York private equity firms that was focused on digital media and tech. And now he runs iHeartRadio, the largest radio conglomerate. So he's seen many cycles, many types of businesses. And he says, look, we're all on a path, and failure or success ultimately isn't the beginning or the end. They're just stepping stones. And you can have your biggest successes out of a failure, and you can create abject failure out of success. And what I think he means by that is you have all sorts of people who peaked early and then never were able to turn that into anything else, and sort of all a downward slope. Or people who failed and failed and failed, and the insights they got from they failed and the grit they got from that is what enabled them to have a resounding success and be able to get up and do it again and again and again. And so I think you never know where things lead, and you have to be open-minded and you have to be resilient. But your biggest failure can turn into your biggest success. And I've had plenty on both sides. And it's none of it's been smooth. And I'd say I learned a lot more from the failures over time than the successes.
Yeah, isn't that interesting? You kind of forget the successes. It's the failures that you dwell on.
Yeah. But you shouldn't. I mean, I think a big lesson is getting used to not dwelling too much. What do you learn? What do you do differently? Keep moving and sort of being able to shrug it off. And I think getting older and having a very circuitous career path, you learn that I've learned that, in many different ways, in different terrains, in different environments.
I wonder if you're seeing this, and I'm seeing this a little bit with founders and entrepreneurs that I know, is kind of the mental health crisis, particularly coming out of the pandemic. What advice do you have for people to stay grounded and to take care of their mental health?
Yeah, no, that's true. And I think before, social media in some ways connected everyone, but pulled everybody apart. And then the isolation of COVID, it's a huge, huge epidemic. And the world's more competitive, and everyone at least showing a face on social media. It's probably not true, but you only see the things and you're comparing. I think it's to a couple things. I think there's a physical element. For me, it's exercise. That is the way that clears my head. I'm feeling terrible. I'm if I'm depressed, if I'm stressed, that is for me the biggest release. Physical activity, ideally with other people, is huge. And I think on the mental side is that resilience and grit and building up. That's like as bad as you feel, knowing that the next day can get better. And sometimes people meditate, and sometimes they do yoga, and sometimes they have a religious practice, but giving yourself space to sort of take a deep breath, get a little perspective, and giving yourself the ability to let things roll off and know it won't happen immediately, but like tomorrow, maybe a little better than yesterday. And that one step at a time, I think, is really important. And that will help create that resilience.
What are you seeing on the AI front at the early stage? Particularly are people utilizing it in their product? Are they utilizing it more internally to run their company? How are you thinking about it? We're probably going to get to a point where every company has to be an AI company, if not already. But give us a sense for what you're seeing.
So I think there's a real dichotomy of the time we're in right now. On one side, I think ChatGPT is probably, maybe except for the iPhone, maybe even equal to that, the fastest growing new behavior ever in history. And everyone's using it more and more, and it's exponentially more people are using it, and the more they use it, the more people that use it, the more they use it. So it's tremendous. And so and there's all sorts of other apps now that are gaining traction, and on a consumer, on a business level, on every level, it's impacting everything. That's one side. The other side is people forget we are barely scratching the surface of of how AI is going to look and the capabilities it's going to provide. It's like thinking about Alta Vista, which was like an early search engine or web browser back, I think, in the late 90s. No one's ever heard of it or talked about that since, but at the time it was revolutionary. So the capability was there, but what it looks like and how it's going to impact is just beginning. And so on one side, we've barely begun. On the other side, it feels like it's everywhere and superfluous. I think we're seeing it in a few ways. One, on a day-to-day level, just having an exponentially more potent information source where it's like a search engine on crack, essentially. You know, my mom uses it. My sister uses it. My nephew can use it. Like it's so simple and so potent, and we can customize it the way we need it. So that's huge. And so that's just on a consumer behavior level. I think with companies, what they're offering outside of the fundamental infrastructure layers, that's Perplexity and a lot of the big ones we hear of, 11 Labs or things like that. That's going to keep changing really fast because it's creating new capabilities, but it's very unclear who the winners or what the winner will look like in that area. But where we're seeing it tremendously is on the back end, how companies are using it to be more efficient, whether it's in marketing where they can create more content and test more media campaigns, whether it's engineering where you can take an engineer and he can get four times the output on testing and coding and rechecking the coding and having the AI running at night and 24/7 so they can constantly be moving and delivering products. So there's a lot of much more tactical use cases that are very, very potent right now. But I think strategically, we're still early. And what we're seeing now is not what it's going to look like in 2 years and definitely not what it's going to look like in 5 years.
I think a lot about empathy when I think about leadership. And I wonder if you think about it the same way, just in terms of the role it plays in being a great leader and what empathy can bring to the table in the business that you're in, right? Like, give me a sense for the role you think empathy plays in leadership.
I think it's critical. And it's a fine line, because at some point, you have to understand what people are going through. You have to be able to motivate them, but you also have to dictate what you want done. And at the same time, you have to be listening because they can be right. You know, you may know a lot, but again, back to connecting dots, they may have an insight that you haven't even thought of because their background is different and they're thinking about things differently. But I think to motivate anyone, you need to understand what drives them and how they're feeling about things and what their unique equation of motivation takes. And you can't do that without empathy. And also, if you run people too hard, then they're going to burn out or get resentful, and you're also not going to get the result you want. So it's constantly a balance of showing leadership and leading by example, but also listening and having an understanding and creating a culture where people feel comfortable putting their best foot forward. And even if there are mistakes made, enabling room for those, because again, like I keep saying, you learn from mistakes. And if you have a culture of empathy, you should have a culture of learning. And if you have a culture of learning, you'll have a culture of getting better and improving and collaboration that will end up making what turns into a world-class culture.
Finally, we end every interview with the same question, and that is at CEO.com. We believe the chances one gives is just as important as the chances one takes. When you hear that, who gave you a chance to get you to where you are today?
Wow, there's so many. Three off the top of my head that correlate to what we're doing. I'd first say, the fact that I got to get, anywhere near Dave Matthews Band as early as that was really Core and Capshaw and Dave and Boyd and Carter in the band. Corn took a chance on me. He's one of the most well-known and well-regarded managers and entertainment moguls at this point. And I was a freshman in college, and he was like, I'm gonna give that kid a shot. So that launched me on the music side. Another person who sort of helped mentor me out of the music business, ironically, is actually Quincy Jones. And the shot he gave me was, there was about a year as I was thinking about what I wanted to do. And I was introduced to him through another entrepreneur friend who was close to him. And he took a liking and took some time with me to really rethink with the changes in the music business, what I should do about my career, how to view that. Because I put all my heart and soul into one industry that I saw there's a chance that was all ending. And how do you think about your life that way? And he was unbelievable. And he ultimately helped me make the decision to go to business school. And there's a lot of creativity in business and other ways to take that creative engine. Jack Welch, I can't even begin to express how incredible it was and how he opened up his own life and letting me sit next to him and work with him and learn from him. And then the last person is Silas Chow, who really helped us get Torch started and believed in us. Silas was a unbelievable businessman, really started in consumer. He built Tommy Hilfiger, and then he built Michael Kors. He took it public. It was the biggest fashion IPO in history. But he also seeded Co2. He seeded Tiger Global. He looks for talent. And I was thinking about starting the fund, and one of his top lieutenants was someone I knew, and we looked at deals together and offered to make the intro. And he really liked the lens and my background and gave me the confidence to start, and he backed us and has just been an incredible mentor in not just how to invest and how to build a firm, but also how to think about macro trends and where the world is going, how technology is impacting it, a global perspective. And so, I don't think I could have created Torch the way I have with the speed and success without his guidance.
That's incredible, man. You've had some incredible mentors, man. Unbelievable.
I have. I've been very lucky.
That's so cool. John, thank you so much for coming on the show. It means a lot.
Absolute pleasure. It's been a very fun discussion.